Hey guys, it's John.Hunter, your mortgage hunter, coming back again with another weekly rate update. This one for November 15th, 2024. So, Powell this week spoke again and is citing strong economic growth, stronger job market, and a little stubborn inflation numbers, some of the stubborn inflation numbers, as reasons why he is talking about now slow rolling some of the rate cuts that they talked about, possibly even December. So rates for the week ended about the same as we started, or about the same as we were last week. We were looking for some direction this week, but didn't really find it. 30-year fix 6.375 to about 7 1/8. 15-year fix about 6 1/8 to about 6.875. FHA 6.5 to about 7. VA 6.625 to about 7. Down payment assistance 5.75 to about 7.5. So, take those with a grain of salt. Rates are based on credit score, loan type, loan to value, property type, income level, whether you're a first-time home buyer, the area that you're buying in. There's so many variables that can affect credit score or can affect rates, that if you want an individualized quote for yourself, feel free to give me a call. We'll love to do it for you, walk you through what, why, and the whole bit. So rates can be a little tricky that way. One of the hardest things to shop. If you've ever Googled anything about mortgages or mortgage rates, you'll know what I'm talking about. You get nothing but ads. It's all just crap, and you never get a straight skinny on where the market is. So if you give me a call, actually, I will even tell you what to watch to see the real deal with rates, or at least watch the trends. Well, maybe I can do a video on that. That'd be a good one. Anyway, before this week, the market was really pricing in a 85% chance the rates were going to be cut at least 0.25% in December. Now, as of this week, after Powell's talk today, it's about a 58% chance, which is still over 50-50. I think the majority of traders believe that it would take a lot to keep the Fed from cutting again in December, but really they're throwing shade on the cuts, how often and how many for next year. I think they're just kind of rethinking that. So the market's searching for direction here. I think, especially with the election and with all Trump's ideas to get the economy going again, there's a lot of optimism around that. But the downside of that is that it could become inflationary, which obviously inflation and overall crazy fast economy is bad for interest rates. So there's a little worrying there. But I think hopefully Trump can thread the needle like he did back in 2016, where we're able to keep growth going while keeping inflation low. And the second part of that being the most important part, keeping inflation low and costs low with economic growth is like the perfect scenario. Hopefully we can get back to that. So we have high hopes for that, but the market's not convinced, and that's where we're at. So, guys, you have to with a grain of salt though, because these things, it just never changes, right? The next report is the end-all be-all report that everything will become clear, right? It never is, right? So it's always until there's a pattern going, and then we're looking for, okay, well, the economy's kind of getting worse. When will that stop? Or the economy's getting better, and how high is high? Until those patterns become definitive, then that you see this kind of market volatility where we had rates really drop right before the first rate cut, and then boom, 30 days later, we're almost a point higher than before the rate cut, which, make that make sense in your head, right? The Fed cuts rates twice, 3/4 of a point, and our rates are higher than we were before the first cut, right? So that just shows you how market-driven rates are, and they're not driven by what the Fed does. So the Fed affects it, but it's not driven by it. So, as soon as the market's convinced on something, it gets priced in immediately. So by the time the Fed does anything, it's old news. And as long as they do what the market expects, it's a non-event, right? Like they used to say, the market is sharply unchanged. That's what happens when the Fed does exactly what the market expects. So, but the market doesn't know what to expect right now. So that's why you see these type of gyrations that we're living through, which I absolutely hate. And I do think it's going to change, though. I think we're going to see weakness in the economy that I think is obviously there, but some of these numbers that are coming out aren't matching it. So it's like you have this overall feeling and the reality that I think people are experiencing, and then you have that disconnect between Wall Street and some of the numbers that are coming out of the Bureau of Labor Statistics. So When that gets a little more congruent, I think we're going to have a much better idea of where we're going with this. And I do believe, and I'm going to stick by my prediction, that I think this direction will become much clearer here before the end of the year, definitely before Trump gets inaugurated. So, so stay tuned. I think it's going to be a little bit of a wild ride. I really hope rates come back down, because I know real estate applications and sales have really dried up in the last 6 weeks. And we're hoping to start the year off strong. There's a lot of pent-up demand. People want to get homes. They want to, improve their situation. But obviously, nobody wants to pay through the nose. So hopefully, we get a little bit best of both worlds there before the end of the year. So, hey guys, have a wonderful weekend. Sorry for rambling if I did, and I will talk to you soon. Like, subscribe, come back for more, and I will talk to you soon. Bye-bye.